Ladies and gentlemen, good day and welcome to the H1FY26 conference call hosted by Canarys Automations Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Danya Dhruv from Stellar Investor Relations. Thank you and over to you, sir.
Thank you, Steve. Good evening, everyone. I am Danya Dhruv and we at Stellar Investor Relations manage investor relations for Canarys Automations. I would like to welcome you all to the Canarys Automations Ltd. H1FY26 earnings conference call. Today, we will be sharing the key operating and financial highlights for the first half ended September 30, 2025. We are pleased to have with us today the management of Canarys Automations Ltd, Mr. Raman Subbarao, who is Chairman and Managing Director of the company, and Mr. Seshadri Srinivas, CEO and Executive Director. Before we begin, I would like to mention that some of the statements made during this call may be forward-looking in nature. These are based on company's current beliefs, assumptions, and expectations. They are not guarantees of future performance and involve certain risks and uncertainties. The company does not undertake any obligation to update these forward-looking statements to reflect any future events or developments. The financial results and investor presentation have already been uploaded to the stock exchanges and also available on the company's website. With that, I now invite Mr. Seshadri Srinivas to share his opening remarks on the company's performance for H1 FY26. Thank you and over to you, sir.
Thanks, Danya. Good evening, everyone. Thank you for joining us today on the earnings call for Canarys Automations Ltd. It's always a privilege to connect with you, our investors, analysts, and stakeholders, and share the progress what we have made together. As we look back on the first half of FY26, I am proud of how far we have come together. Completing our first acquisition and launching our first product are more than just milestones. They reflect the passion, teamwork, and the vision that continue to drive Canarys forward on its journey of growth and transformation. This evening, I look forward to sharing the highlights of our performance in the first half of FY26, along with the important updates on our business strategy and steady progress we are making on our journey of transformation and growth. Over the past 30-plus years, Canarys has grown from a small IT services company into a trusted global digital transformation partner. We now serve more than 1,000 customers across 10 countries, offering innovative, reliable, and future-ready solutions. Our success is built on three core pillars: our proprietary software tools, strong alliances with global technology leaders, and a talented team with expertise in AI, ML, data, automation, and cloud. At Canarys, our technology solutions vertical is where transformation begins. It brings together the best of software, AI, data, cloud, and automation to help businesses work smarter, adapt faster, and stay steady for what's next. Our work spans several years in digitalization and DevOps. We help companies modernize systems, automate testing, and deliver updates faster. In cloud services, we assist clients in moving to and managing platforms like Azure, GCP, and AWS while optimizing performance and cost. We continue to invest in products and solutions that enhance automation, intelligence, and the way businesses operate. We are also deeply focused on talent and innovation. One of our key goals for FY26 is to train 25% of our team in AI, ML, and data skills to strengthen our leadership in emerging technologies. Our legacy modernization services help customers upgrade decades-old code using our proprietary tools, while our data intelligence practice enables organizations to make smarter decisions with dashboards, analytics, and predictive systems. Finally, our strategic transformation services help both startups and large enterprises use technology to drive meaningful change across their business. One of the most distinctive part of our technology solution is also, water resource management. We have implemented UFIS, urban flood early warning systems or solution, canal automation, flood control, and smart water supply projects across 15 different states in India, using IoT and SCADA systems to help governments manage water in real time. These projects have strengthened our expertise, but given longer payment cycles, we now take a more focused approach, choosing opportunities that offer speed, scale, and better commercial outcomes. What drives this success is not just our execution capability, but also our continued investment in developing our own software tools that make these solutions smarter and more effective. Over the years, we have built 25 plus proprietary domain-agnostic solutions that solve real challenges in DevOps, cloud migration, automation, and modernization. These solutions, now listed on global marketplaces like Microsoft Azure, GitHub, SAP Cloud, and our own Canarys marketplace. These solutions reflect our growing innovation and credibility. Our journey has been strengthened by 10 plus strategic partnerships, including 7 OEMs and 3 AI alliances. Among them, our collaboration with Microsoft and GitHub stands out, where we hold advanced specialization and multiple solution partner designation across data, AI, digital innovation, and Azure infrastructure. By combining these partnerships with our own tools and expertise, our technology solution vertical has evolved into a powerful growth engine, one that helps clients scale faster, work smarter, and stay ahead in a rapid changing digital world. H1 FY26 marked a defining milestone in Canada's global growth journey with the strategic acquisition of Fortera, a US-based AI, data, digital engineering, and IT consulting firm. Completed this acquisition in April 2025 for a 51% stake, underscored our transition from a local solutions company to a global, active, innovation-driven technology enterprise. Fortera brings over 100 skilled professionals, a strong portfolio spanning banking, financial services, retail, pharmaceutical, and manufacturing, and have a long-term relationship with more than 25 large enterprise clients across banking, healthcare, telecom, and pharmaceutical sectors. With H1 FY26 revenues exceeding $6.6 million and profit before tax of about $500,000, this acquisition strengthens Canarys' presence in North America, enhances our capability in artificial intelligence, cybersecurity, cloud, DevOps, and analytics, and opens cross-selling opportunities across our client base. Advancing our innovation agenda, we launched ARIS on August 20th, 2025, our first artificial intelligence-powered software product for the pharmaceutical and life science sector, introduced simultaneously in India and North America. ARIS is an intelligent compliance assessment platform that evaluates diverse digital content against global regulations, internal policies, and custom business rules. Using a blend of proprietary AI agents, advanced machine learning, and large language models, it automates non-compliance detection, enables expert review, and continuously learns from new regulatory updates. Designed to reduce cost, mitigate risk, and ensure audit readiness, ARIS empowers organizations to achieve proactive compliance and operational excellence across markets. I'm also delighted to share that Canarys was recognized on the global stage at the GitHub Universe event in San Francisco, US, where we received GitHub's Overall Growth Services and Channel Partner of the Year 2025 award. This global recognition from GitHub, a Microsoft subsidiary, underscores our strong growth, strategic impact, and leadership in the DevOps and digital transformation ecosystem. H1 FY26 represents a moment of acceleration for Canarys, where vision, execution, and performance came together to shape our next phase of growth. Let's start with what we achieved on the business side. We achieved a strong business momentum in H1 FY26 with the successful delivery of 164 projects across diverse industries such as IT, BFSI, healthcare, logistics, etc., underscoring the growth demand for digital transformation. We welcomed 52 new customers to the Canarys family, expanding our reach across new sectors and geographies. Our order book now stands at a healthy 208 crore rupees, out of which 151 crore rupees from technology solutions vertical, a significant rise from 105 crores in FY25, and 57 crore rupees from water resource management. This growth comes from the steady investments we have made in our people, platforms, and partnerships, and it truly reflects the strength of our business model as we continue to grow. Looking at the financial performance, now coming to our financial performance, total income for HY26 stood at 102 crore rupees, reflecting a 166% year-on-year growth, led by a strong momentum in technology solution, which grew almost 200% year-on-year. Our EBITDA stood at 13 crores with a 13% margin. There's a slight dip in margin, which was expected as we made strategic investments in team expansion, product development, and global scaling. Our profit after tax stood at 9 crore rupees, reflecting a margin of 9% and demonstrating our ability to sustain healthy profitability while continuing to invest in future growth. On the balance sheet side, we remain disciplined. Our debt-to-equity ratio remains very low at 0.1x, underlying our conservative and healthy capital structure. H1 FY26 has been a defining period for Canarys as we strengthened our global presence, deepened customer relationships, and expanded our technology capabilities. The integration of Fortera in the United States has added scale, talent, and new opportunities across key sectors, while our continued investments in product innovation and digital solutions have reinforced our position as a trusted technology partner. Guided by our vision, values of integrity, innovation, sustainability, and inclusivity, we continue to focus on Vision 2028, expanding our reach across North America, Europe, and Asia-Pacific region, advancing our expertise in artificial intelligence, cloud, and automation, and driving growth through continuous learning and product development. With a strong order book, a growing customer base, and dedicated teams, Canarys is well placed to sustain its momentum and deliver long-term value. With that, I would like to thank all the investors and the trust that you have really given to Canarys. I request everyone to give the continued support. With that, I conclude my remarks. Over to you, Danya. Maybe, we can open the floor for any questions.
Yes, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Rahil Dasani with MAPL. Please go ahead.
Hi, am I audible?
Yes, sir.
Yeah. Good afternoon and thank you for this opportunity. First of all, congratulations on the good set of numbers. My first question is I wanted to understand how much of our revenue is recurring and annual in our base business, and also the same question for Fortera.
And also, Fortera, okay. Sure. Canarys India, we have the repeat business of about 35% comes from the repeat orders and the long-term contracts what we have. And with Fortera, we have 75 to 80% is a repeat order because we have long-term contracts, at Fortera.
Got it. Okay. And now, sir, continuing with Fortera, a few more questions there. Margins in Fortera seem to have improved compared to last year. Based on our investor presentation, EBITDA margins in FY24 were less than 9%, and now. And secondly, going ahead, what sort of margins can be possible in Fortera? Can Fortera also touch Indian business margins that we achieve close to 20%, like we have said, in the next 1 to 2 years?
The objective is, to invest and grow Fortera as well. We are also taking our solutions into Fortera's customer, and we are also trying to build these similar margins there. Yeah, it takes some time because, we need to integrate and take our solutions and get new business delivered and also, consolidate. But the objective is definitely to improve the margins, both Fortera and Canarys. And I see that is quite possible.
Got it. So, is it fair to assume that 18 to 20% is achievable in Fortera in the near term, in the next 1 to 2 years, maybe?
Should be achievable, yes.
Got it. And like we established that 75 to 80% of the Fortera business is recurring, and they already have an order book of close to 15 million as of March 25. So,
Correct.
what sort of growth can Fortera see now with new management and focus? Can we see 180, 200 crores from this business, since we already have an established order book with an established recurring business? What sort of growth can we see in this part of the business?
The consolidated you're talking, or just the Fortera?
Just Fortera.
See, Fortera been just 6-7 months since we acquired, and we are trying to take our solutions to the existing customers. So the objective is, in the last presentation also we mentioned, it's a land and expand. So we landed with the acquisition. So we have reached out to the customers, the existing customers, and we are trying to socialize the solutions what we provide here. Since we have long-term contracts with them, and with the kind of solutions what we are trying to pitch to the existing customers, so that, because they are all enterprise customers, right? So they also take a little time to digest this new solutions and release the new work orders. We see there is some good interest and the queries coming from the existing customers on the Canarys solutions, especially now. So we start the conversation from again, next year, because December, most of the US, they don't really operate. So from next year, they promise to continue the conversation. So we see that we can expand. First is the existing accounts business, and then we approach the new customers with the overall Fortera plus Canarys solutions together. So that is the approach that we are taking. So it takes some time to grow that, but I see it's a gradual increment in the next 24 months.
Got it. So just to summarize this a bit, what I was trying to understand is the standalone Fortera growth, and what you said is right now the focus is to cross-sell Canarys product to Fortera customers rather than expanding the Fortera customer base and scaling that standalone business more, right? Right now the focus is to cross-sell the Canarys products.
Yeah, there's an addition, right? I think first you're right. We need to cross-sell the solutions to the existing customers. And the new customer, we go with the Canarys plus Fortera solution. So we have the expanded solution catalog that we are taking to the new customer base. So that is the approach, acquiring new customer base. But with the existing, you are right, cross-sell the Canarys solution.
Perfect, got it. And so just to understand our product business better, we have recently launched Auris. So I know it is too early to judge it, but in terms of scale and customers, how is it scaling up, and what sort of feedback are we getting on this product from our customers?
The product feedback has been fantastic. We are working with a couple of pilot customers. Still not commercialized, because we want to test the waters. So we are working with the pilot customers to start with, but the feedback has been fantastic. They also appreciate because it is the AI based, and we are also introducing our own proprietary language model now. The work is still in progress. So once that is available, I think that adds as a proprietary tool or the model. So that will drive even more in terms of the flexibility and scalability. But yeah, the feedback has been pretty good so far.
Got it. And what would be the commercialization timeline for this product?
It will take another at least 6 to 8 months to start the first commercial engagement.
You said 6 to 8 months.
Correct.
Got it. And sir, in this year's annual report, we have mentioned about the. Sure, I'll get back.
Rahul, could you? Thank you. The next question comes from the line of Akshay Thakur with Pico Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, I have two questions primarily, and one question is on industry. So I'll go with the first one. So it was said that in year 2015 to 17 that cloud-based services would be would act like a disruptor, and what we saw is basically all the IT service companies were the solution providers in that. So do you see the same trend happening with AI? And if yes, how are you strategizing to provide the products? As in, what proportion of the new clients you're getting are asking for the similar services?
Good question. AI, it's a disruption happening in the market, and any new customer, the first thing they ask is, do you have AI practice? And if yes, what kind of practice, right? So even if you've gone through my presentation, 25% of the Canarians, we have really upgraded the capabilities into AI, ML, and data. So how cloud interrupted the entire business and the infra side, right? So the scaling part, AI is interrupting the automation and early to market. So the customer preferred to be on AI because, you can deliver much faster, pre-tested, and, quality is much, much better. And the cost-wise is also, optimized. So it is inevitable. At least, for now, it is difficult to sustain without the AI capabilities. So we are investing constantly on the AI skills, upgrading our staff, upgrading our solutions. So more than 25% of the Canarians are already upgraded. We had a lot of training programs for them, certification. So most of the projects are AI-driven today, whatever we deliver.
Okay. Thank you for that, sir. One more question. So what proportion of your revenues would be proprietary products, and are they like a pay-per-use basis or annuity model you follow for those products?
The proprietary solutions I would call rather than products, right? Product we are just released. Auris is the first product that we have released. Yet to commercialize, as I mentioned, it takes some more time. Solutions are not paperized. It is all frameworks that we use. We use these solutions as framework to deliver. So when I say framework, it is faster delivery cycles and it's a pre-tested, right? So that is the framework that we use. So most of them are frameworks, and of course, it will also sign up on the annuity business, because the moment you deliver the solution, they would also sign up on the support and the extensions and the enhancements. So you would end up signing the annual or annuity business.
Okay. Thank you, sir. So one last question on, so your presentation says that 7% of the workforce is working in the water resource management services. I was just wondering what type of qualification would be required for this type of services, and as a company, how are you building up the technical know-how or the knowledge required for this, and how strong a moat that can be when it comes to this type of services?
See, WRM is also a software solution that we provide. It integrates with the hardware. So the person has to understand the hardware or the IoT devices to an extent where, integration is possible. And we have SMEs, the subject matter experts are different. So they come from the industry and they understand the water business, the problems, what government is facing, or, at the site level. But from the technology perspective, it again falls under the core engines and the framework that we built. And they qualify as per a regular talent acquisition.
Okay. That's it from my side. I'll join back. Thank you.
Thank you. The next question comes from the line of Divyansh Thakur with Fintrust Capital. Please go ahead.
Yeah, good evening, sir, and congratulations on the great results, sir. I wanted to ask, what specific segments or geographies that will drive the future growth, and what are we looking in the next 3 to 4 years? How large can this business become?
So the typical sectors that we operate, we call it as BRIM PH, banking, retail, insurance, manufacturing, pharmaceutical, and healthcare. And of course, the IT IT sector is always there because, most of the large enterprise are our customers. So these are the segments that we operate and we provide solutions. And these sectors are ever growing, right? I mean, look at the banking, insurance, pharma, manufacturing is always in the growth journey. So we intend to invest and develop solutions which can cater to these sectors. So that's the idea. Even if you look at the product, what we have invested is to start with, we are providing to pharmaceutical industry. So the focus has been on this BRIMP hedge, and we continue to do that. And I don't see any challenge in these sectors on the growth side.
Okay, that's great, sir. Sir, when do we expect to migrate to the main board? Like, is there something pending from our side to complete the transition?
Plans are on the cards, but I don't know, may not be a good this one to reveal the timeline at the moment because we are also evaluating ourselves on both. One is on the preparedness and the eligibility and benefits. All of that are getting discussed internally. Once things are finalized and once we decide, definitely announcements will be done.
Sir, just one last question. What are the main reasons for the margin decline, and do we expect to be back on the historic levels?
So the margin decline, as I read out during my presentation as well, we constantly investing on people, products, and the expansion. So when you are at the growth phase, two things can happen, right? So one, whatever the profits we generate, you can invest back into the system and then grow, or you can, raise money through other systems, meaning, it can be debt or equity or any other means. We're not taking the latter route, so we are investing from our profit margins and then, growing for now. And this would continue for at least, next few quarters, and then once we get into the autopilot mode, then we can see there will be a change in the margin as well. But we are cautious on even the investments and how we want to really scale this.
Sir, one last question, sir. What is the sustainable margins are we looking at for this year and for the incoming next year? Yeah, and to scale up in the coming time.
So we continue to deliver the same amount of margins what we are doing today, so that will allow us to sustain and also grow. We don't mean to go down below what we have delivered now. So that's the plan for now.
Thank you so much, sir. We'll fall back in the queue.
Thank you.
The next question comes from the line of Murtaza with Pinpoint X Capital. Please go ahead.
Hi, sir. Good afternoon. Congratulations on the good set of numbers. I had three questions. First of all is on consolidated basis on H1 we saw about a growth of on Y&Y growth of 160% plus, and which was largely driven by technology solutions and Forterra consolidation. And so it's how much of the growth is organic in terms of in organic, and what kind of normalized organic run rate can we assume going forward, on a ballpark basis? Yeah.
Okay. No, thanks for that. Definitely, if you look at the organic growth also, we're able to grow year on year, and been focusing on the IT solution sector quite a lot. We've grown almost 200% from what we reported last year. So organic, this one also, the product and solutions what we are delivering, it helps our organic growth, and these acquisitions are identifying some of the means is our inorganic plan. But if you ask me proper number or a guidance, we have not built the practice of giving forward-looking or a guidance for now. But definitely, the plan is to grow organically and wherever opportunity comes, inorganic as well.
Okay, this helps. Okay, sir, another question I had was, our order book has scaled up to about 2,000 million rupees. And can you please give a breakdown in terms of what part of that order book as of now is in a multi-year annuity and versus one-time projects, a ballpark figure would work?
So the WRM is definitely in a multi-year contract because we sign up minimum 3 years and it goes up to 5 years. So it is a 3 to 5 years contract with WRM. It's all multi-year. With IT solutions also, as I mentioned, about 35 to 40% is on a multi-year contract, and rest are short, mid-term to long-term, I would say, 6 months, 12 months, 15 months kind of contract.
Okay, sir. And one final question I had, I saw in H1 our attrition rate has dropped to 5%, which is kind of very low for the sector as well as our past experience in our company as well. So, is it due to the shift on on-site and off-site mix or maybe some other initiative we have taken? How sustainable is the rate?
Yeah, as I mentioned, we have given a lot of importance on the skill upgrade capabilities, and we have opened quite a lot of training programs for our employees, especially on the AI, ML, and data. And they're all working on the cutting-edge technologies, delivering quite a lot of good projects. So that has really reflected on the attrition rate. And also, company is growing, and they have seen both organic and inorganic growth happening, and the culture, what we are working internally to get them aligned. So that has motivated them and, has helped to maintain this attrition rate. We are working towards, keeping this as a standard this month. Yeah, hope we'll be able to achieve it.
Okay. Thank you very much. I'll fall back in the queue. Thank you.
Thank you.
The next question comes from the line of Rahil Dasani with MAPL. Please go ahead.
Yeah, thank you for the follow-up. Just to continue on the questions that I have regarding our product business, in this year's annual report, we mentioned about the CMF platform product. We were to launch it in this year once the testing phase is completed. So if you can also share more on this,
The CMH is a framework. It's a modernization framework which we are using to deliver to our existing customers and to the new customers already. So that framework it keeps evolving as we progress. So the CMH is already available as part of our solution now.
So this is not a product; it's a solution. You are saying?
Correct. It's a solution.
Okay. So the 7 to 8 crores of intangibles
No, there are
that we...
two ones. So you are talking about the migration hub or the modernization? If you are talking about the migration hub...
I am talking about the modernization.
Modernization is a framework. We also have migration hub, which is, that is also CMH, Canarys Migration Hub. Okay. That is a product which is already available in the market. It's available in both GitHub, Microsoft, and Canarys marketplace. That is targeted towards the dev tool. And modernization framework is targeted on the digital transformation.
Got it. Okay. So if you can maybe share that the 7-8 crores of intangible that I'm seeing in the CWIP, is that for which product are we seeing this? Or are we working on multiple products
this is
which are to be launched?
Combination of, REs and quite a lot of products. Right? I mean, CMH, even on WRM, we have the solution. All of that combined together.
Okay. And how much more can this amount further increase to? Because it has already increased from 3 crores to 5 crores to now 8 CR.
So as the product development is done, we are trying to, commercialize that, and, that will be taken out. So there is a constant investment required for us to really grow in the transformation, right? So if you look at services to solutions to product transformation. So with IT, there is a value chain, right? So it starts from your consulting or staffing, and then services, then solutions, and the product. So we are moving higher the value chain. So when you want to move higher the value chain, there is good amount of investments required. At the same time, good amount of returns are also expected. So that is where we are moving today. We are now in the cusp of both solutions and product. So higher on the value chain and higher returns. So as I mentioned earlier as well, the investment will be there for next 12 to 18 months. And then once starts commercializing, then it is self-sustainable.
Got it. That is helpful. So I'll tell you why I'm asking this is because as of date, our company is not generating cash flow. So any and all amount that we invest for product development, that will show up in our debt on the balance sheet. So that's why I was trying to understand how much more are we planning to spend on product development in the next 1 to 2 years, because that's the exact number that will add to our debt, because as of date, we are cash flow negative.
Correct. So we are working towards it. Thanks for that.
Sorry?
No, we are working towards that. Thanks for that, input and the question, definitely. That helps us to...
Fair enough. And sir, regarding the margin fall reasoning, employee cost is, when you said that one of the reasons is employee cost and we are hiring for that investment phase, for the last few years, employee cost has been growing at the pace of sales growth. So it is not outpacing sales growth. So what particular cost or head has impacted the margin post 2023 when we achieved close to 17%? If you can share more specifically, because there has been some sort of a gap, because in our con calls also we used to say that both our businesses can do 20 to 25% operating margins.
Correct, because, we are also bringing quite a lot of senior leaders into the system. As we grow, right, you also need good senior leaders into the system. And these senior leaders, the cost, right? So today they are expensive. And for a reason and a cause, they join companies like us. So we are attracting good seniors and the leaders from the market. So that is one of the specific costs, because, they cannot be a direct billable role, right? Because they come for certain initiatives, they come to drive certain business. So their cost to be amortized in the entire system. And the second, definitely on the scaling part, because, when you acquire companies in North America and then, you want to scale business there, so there is a lot of travel and the sales, marketing, campaigning efforts and money to be invested. So we are also investing in that. And of course, on the solutioning front, as we grow, there is an investment. So these are the three main buckets for the investments.
Fair enough. Got it. And sir, just last question from my side. This is a rather basic question since I'm new to the industry, so maybe you can help me out. In our last two phone calls, we shared about adding 73 and 63 new logos individually in the last two phone calls. And based on our investor presentation, our customer base is 100 to 120 customers in our base business. So how I'm thinking about it is that even after adding such a large number of customers, our turnover isn't increasing as much in the base business. So if you can explain why is that, or am I missing something here?
Yeah, good question. And also, let me make you understand one of the core business segments in this one is DevOps, what we call. So DevOps is again, related to Microsoft and GitHub partnership, and DevOps stands for an ERP in the IT industry, just to give at a very high level. So this DevOps business, what happens, there's a lot of customers, they come for short-term engagement, and the delivery cycles are also pretty short. And the contract value will also be not a big contract value that, we get signed up with such engagement. So that's the reason if you look at the direct proportion between the number of customers, what we add and the revenue, it looks a little skewed. That's because of this. But the strategy now is, say for example, when you acquire some large enterprise customers through DevOps, it opens gate for you. So it also allows you to mine that account and then, grow deep into the account and get more business. So that's the reason DevOps business helps us in terms of customer acquisition and the scale. But also, it also creates a little confusion like, what you have. That's a good question, and I think, it's a good response to everyone. So
no, got it. That makes a lot of sense. So, sir, considering that we have onboarded so many large customers, it's just in continuation to the current question. Yeah. Since we have already onboarded so many new customers and we just need to cross-sell them higher value products now, that's my understanding from what you shared. So what sort of growth can our old base business that we have currently, where we are doing close to 89-90 CR as of FY25, what sort of growth can that business see, since last 2-3 years have been rather flatter for us? So now that the customer induction is done, what sort of growth can we see in the base business?
We are seeing some of the accounts, grown 100%, 200%. And there are some customers, like especially in the banking and insurance, it takes time because every solution, it has to run through a lot of audits and processes because of the security and other aspects. But we have seen good growth in some of the customers. In one of the insurance customers where we have seen 150% growth in last 18 months. So with that, there are combinations. But our intent is constantly, mine the account and, keep the relationship very strong.
Got it. Okay. Sure. I'll get back in the queue.
Thank you. The next question comes from the line of Neeraj Chajar with Branch. Please go ahead.
Yeah. With regards to your Fortera acquisition, when you have to purchase the balance 49% and at what valuation?
So we have 3 years as the deal. So we have time next 2.5 years, 2 years, 3 months. So the initial valuation was done at 5 million and 51% acquired on the 5 million valuation. The rest 49% is on the EBITDA multiple. So yeah, we have to see where we stand at the end of the 3rd year, but we also have the option to go a little earlier to that.
And what's the EBITDA multiple range at which you have to purchase?
See, whatever the valuation that we have done, it's the same EBITDA multiples, but we have to see what is the EBITDA that will be there on that particular period.
Got it. Second is with regards to your water resource management revenue dropping down, which is a conscious decision you are to improve your working capital days kind of thing. So is it like dropping from 34% to 2%? Is it because of the H1 full year basis, because most of the revenue gets booked in H2, or that's how it's going to be, where water resource management becomes very, very small, minuscule portion of the total revenue?
No, definitely there's some traction in the H2. So we are looking at 80-20 ratio, 80% coming from the IT solutions and 20% from the water resource management. And that 20%, we target to complete in the H2.
So considering that there will be even significant growth, one because of the base effect itself of your acquisition that you have done, plus the water resource management revenue coming into the H2, because the technology solution is fairly constant, so we will be seeing a stronger H2, I guess.
Correct. And also technology solutions, we are focused more, and there's also a good growth even at a consolidated level and at the standalone level. So that will continue to grow, whereas 20% contribution we expect from the WRM.
One another thing is with regards to the order announcement. While I see the order book increasing out there, but under the SEBI rules, you have to announce any large orders. So what's the threshold of the order that you have kept on which you have to make those announcements? Because I don't see any order announcement coming up from the company's website, but when the quarterly or half-yearly numbers come, that time only we see the growth in the order book.
I'll have to check on the threshold. It's not on top of my head, but I can definitely check and maybe, Stellar Group or Investor Relations,
yes,
so they can
think
get back to you on the
smaller company, you should keep a lower threshold so we keep on getting a regular update onto the order book, because whenever you will be announcing a new order, we get to know what's the outstanding order book or the total order book that is running.
I get it, yeah. I don't know. I'll have to check whether we have the flexibility of defining the threshold, or I'm not too sure because I'm not an expert in that, but I can definitely take this input.
What is a major order? That is what you need to do. Whatever is a UPSI, you have to decide.
Correct.
That this is a UPSI, and then I have to go ahead and announce it out there. Last is a housekeeping. What portion of warrants have been already exercised? What is pending by when that needs to be exercised?
No, 100% is exercised.
100% is exercised. Okay.
Yes.
Mr. Neeraj, does that answer your question?
Yes, I don't have any further questions.
Thank you. The next question comes from the line of Divyansh Thakur with Fintrust Capital. Please go ahead.
Sir, am I audible?
Yes. Yes, you are. Please go ahead.
Sir, I wanted to ask, sir, what is the growth rate that we can expect going forward after the acquisition? Like our business wasn't doing much, and like if you can tell it on a blanket basis going forward.
I don't know the growth rate. How do we? As I said, we have not really built that forward-looking or the practice or the guidance. See, we are. If you look at the last 2 years' history, right? So, 20% we are growing, and this year the H1 results are pretty much, above the last 2 years' results as well. So maybe you should extrapolate at this and then arrive at some kind of a calculation. But we are also working towards how do we give some kind of a guidance. Once we have that kind of policy, definitely I love to share the futuristic numbers. But for now, we are pretty much in the growth phase, and we are excited about the journey. So you can extrapolate. That's what I could say.
Thank you, sir.
The next question comes from the line of Rahil Dasani with MAPL. Please go ahead.
Yeah, thanks for the opportunity again. So just to continue on the previous participant's question regarding the order book, one observation that I had was that our order book has not been growing as much. We had one large order in May 24 last year of approximately $13 million, close to 120 CR. And post that, we haven't been able to win any significant orders. There are a few smaller 2 to 3 crore orders, but there has not been any large significant win which is helping scale up our order book. So how should we think about this?
See, if you look at the current order book is also pretty much healthy. It's over 200 crores. And probably, the threshold level orders may not be there, but overall order book looks pretty healthy, right? I mean, 208 crores, it's a pretty good order book what we have. And the split between IT solutions and even the WRM looks pretty healthy. 50 odd crores from WRM and 150 odd crores from the IT solutions is a pretty healthy order book what we have. But yeah, as I mentioned earlier as well, I'll have to check on the threshold and see how do we start announcing and other stuff. But yeah.
Got it. But so why,
it looks pretty healthy.
So why I was asking this is because when we are seeing this 200 crore order book, I believe the $15 million from Fortier is also included into this. So in March 24, the standalone order book was... Okay, so that is different.
200 odd crores is standalone.
Okay. And what would be the order book in Fortera right now?
No, Fortera also we have given the order book, right?
Actually, in this investor PPT, we didn't have that number. Hence, I was a bit confused if the 15 million is also included in this 200 CR order book.
No. 15. See, Fortera already have similar kind of an order book, around 13 million order.
Okay, so you were saying that the base business, old business has 208 crores order book, and Fortera, excluding that, has another 130 or 120 crores order book, roughly.
No, 150 crores is the IT Solutions order book, which includes Canarys Automations Ltd and Canarys Car. And Fortera has a separate, and WRM has 50 plus crores of order book.
Perfect. Got it. Okay. And sir, few questions around the numbers. I can see a large increase in our other current asset. Is this because of the unbilled revenues, or is there some other reason for this?
It is because of the unbilled revenues, you are right.
Okay. And from the 16 crores in standalone in the total other current asset, how much would be the unbilled revenue?
14 crores is the unbilled.
Okay. So that number is scaling at a big pace. Okay. And the same number in
Concall is already
20.
billed.
Sorry?
Post I think September 30th it is billed. I mean we have that 30 45 days window, right? So it is all billed.
So this would be all water business, right?
No. It's all IT Solutions.
So unbilled revenue is for IT Solutions.
Correct.
Got it. And the similar number is 24 CR, so additional 10 crores in subsidiary.
Additional 10 crores in subsidiary.
Because what I'm saying, the other current assets in standalone is 16 CR and 24 crores in consolidated.
Correct. You are right. Yes. That additional
So what is the reason for this unbilled revenues? Because usually in IT companies, we don't see unbilled revenues at such a significant number usually.
See, generally what happens, even to bill, right, you need an approval mechanism. Generally you get the approvals, the deliverables, milestones achieved in the first, second, third week of the following month. But in this case, we had to close the books, right? So we had to consider that as well because, the work completed and delivered, but we were waiting for the customer approval. So it had to be booked. Otherwise, expenses gets booked and then, there's no revenue accounted for that, right? So that's the reason, there will be a slight delay of 2-3 weeks, and that happens immediately post we close the books.
Thank you, sir. Ladies and gentlemen, due to time constraint, this was the last question. I now hand the conference over to Mr. Seshadri Srinivas for closing comments.
And thank you all for being part of our conference call and for actively participating in the call. We appreciate your support and trust in us. We hope we have been able to address most of your queries. In case of further queries, you may reach out to our investor relation advisor, Stellar Investor Relations. Thank you and have a good day, and please continue to provide the same amount of support and encouragement.
Thank you.
Thank you. On behalf of Canarys Automation Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.